the show with banks, which are in focus in our What's Trending segment on Halftime Report today. State Bank of India is leading the charge after strong Q3 FY26 performance and a hike in the FY26 loan growth guidance, which has really enthused the markets. It's at around 13 to 15% now. IDBI Bank is also buzzing as Dipam has received 2 bids for it, while the recalibration of deposit insurance premiums by the DICGC is also aiding and adding to that positive sentiment for the sector. Let's go across to Gaurav for a quick wrap on the PSU Bank earnings, valuations and the insurance premium impact, and we'll follow it up with some key takeaways from the State Bank of India management. Gaurav, over to you first.
Well, yes, if you look at PSU Bank's index, it is one of the biggest gainers in a day today, and we have seen a gains as high as 3% in the index itself. And this gains are obviously led by SBI, who reported strong set of numbers, but we saw Indian Bank and Bank of India also supporting these gains. First, let's talk about SBI. If you look at the results, those were actually spectacular results for a bank which is the biggest bank of India. 15.5% of a growth in terms of loan book, and they have also upped their guidance from 12 to 14% to 13 to 15%. Other than that, if you look at asset quality as well, it has been a very strong quarter for asset quality, because we have seen net NPAs now reaching 20 years low level at 0.39% only. And lastly, if you look at profit, that also grew almost by 25% on a year-on-year basis. So definitely a very strong set of numbers in terms of SBI's result in third quarter. But there are other factors as well. Throughout this quarter, we have seen most of the banks who have already reported the numbers, and we saw some hits and misses. First, let's talk about Bank of India, Indian Bank, Union Bank. If you look at these banks, we saw Bank of India actually reporting very good set of numbers in terms of net interest margins. Indian Bank and Union Bank actually reporting a very strong set of number in terms of ROA expansion. Both of these banks actually reported very good number there. On the flip side, we also saw PNB actually missing their net interest margin target and guidance. And at the same time, we saw Canara Bank actually also reporting net interest margins which were actually lower than the street's expectation and their own commentary itself. So all in all, we saw this effect as well. But what is happening is that there is another booster which is coming up, not just for PSU banks, but for the entire banking pack. Now, this is the DICGC premium. Remember, we usually retailers get premium insurance up to 5 lakhs for their deposit, and for that bank pays a small amount of premium to DICGC, which is 12 paisa for 100 rupees of deposits. Now what RBI has done is that they have actually reduced this premium. They are going to categorize the banks as A, B, C and D, and for each of the categories the premium will be different. For category A, the premium will be as low as 8 paisa for 100 rupees of deposits, which is actually positive for banks, because analysts believe that this can actually boost the ROAs almost by 1 to 2%, and it can also give a boost to the ROAs almost by 40 basis points. Remember, the analysts believe that this is going to be a bigger booster for PSU banks, and that is the reason we are seeing a big push in the PSU bank sector, not just today, but for the last few days in trade.
Okay, all right, take that point. Thank you so much for summarizing those moves for us, Gaurav. That's the report card from the PSU space, but SBI